RLUSD may end up being one of the most understood launches in crypto history because most people still think RLUSD is competing with XRP. They think Ripple launched a stablecoin because XRP somehow failed. I think the exact opposite is happening. I think RLUSD may end up being one of the biggest catalysts for XRP adoption the market has ever seen. And the reason why has almost nothing to do with retail speculation and everything to do with how the future financial system actually works. RLUSD is a proof of concept for how institutions, banks, governments, payment providers, exchanges, and enterprises can use digital dollars and eventually their own stablecoins with an interoperable infrastructure. And XRP sits at the center of all of this to provide liquidity coordination across that entire layer. In this video, we're going to break down why tokenization changes global finance forever, why stablecoins are exploding, why liquidity fragmentation becomes the biggest problem in this new financial system, why RLUSD may onboard institutions faster than XRP alone, and why XRP becomes more important in a multi-stablecoin world than it is today. So stick around to the end. We got a lot of gold nuggets for you, so let's dive in. XRP and RLUSD create a liquidity flywheel that continues to scale for decades. As we enter the largest infrastructure transformation in financial history, not just in regular history or crypto history, it is the largest change that's ever going to happen in our lifetime. Every asset class, you name it, real estate, treasuries, stocks, private equity, commodities, trade finance, insurance products, carbon credits, debt instruments, everything is going to be tokenized. The Boston Consulting Group projected tokenization could become $16 trillion market by 2030. Personally, I think that number may be a little bit conservative because tokenization solves problems traditional finance has struggled with for decades. Right now, real estate can take up to 60, 90 days to settle transactions sometimes. Cross-border wires take multiple business days. Private equity locks up capital for years. Securities markets still operate on delayed settlement times, and international liquidity requires massive pre-funding accounts to the tune of $27 trillion in Nostro Vostro. The current system is fragmented, it's slow, and it's expensive. Tokenization changes all of that. When all these assets move on chain, settlement becomes near instant. Ownership becomes fractional. Liquidity becomes global, and markets become interoperable, which also allows for all the capital to become programmable. And that's why every major financial institution is exploring this right now in 2026. BlackRock, Franklin Templeton, JP Morgan, Visa, MasterCard, you name it. It's no longer theoretical. This is infrastructure migration this year. And here's where things get interesting. As everything becomes tokenized, everything also becomes fragmented. You need liquidity across all of this. Most people assume that the future, one stablecoin ends up dominant. I don't think that's realistic at all. I think the future has thousands of tokenized deposits and stablecoins and other tokenized representations of value that these banks, governments, and institutions will need to be able to drive their own incentives, but also participate in the broader economy. This is true for fintechs and exchanges, banks, you name it. All of them will be creating these products. And now we've got tokenized money markets. We've got tokenized treasuries, and countries are starting to issue their own regional settlement assets. And every one of these creates another fragmented piece of liquidity that's its own silo. This becomes the next financial major problem, is more fragmentation. So let's say, as an example, Bank of America has a stablecoin and Citi has their own stablecoin. And a tokenized treasury fund exists in one ecosystem or another. And then you also have a regional payment network that uses another settlement asset. How does value effectively move between all of them? That's the real challenge. The future financial system doesn't need stablecoin. It needs interoperability. It needs liquidity, and it needs a neutral bridge. And that's where XRP becomes extremely important. If all of these large banks were to just issue their own stablecoin, the other banks aren't going to want to settle in their stablecoin. They're going to want their own stablecoin on the other side of the transaction. You need a decentralized DEX and an asset that can move that value in between these ecosystems to settle in whatever asset they want on their balance sheet. So let's talk about RLUSD specifically. RLUSD is Ripple's US-backed stablecoin on the XRPL and on Ethereum. But this is where people misunderstand the strategy. Ripple did not launch RLUSD because XRP failed. Ripple launched RLUSD because institutions think differently than retail. Institutions want price stability. They want regulatory clarity. They want predictability. They have to deal with compliance. Things have to be audited, and they need familiar accounting treatment. Most institutions are not comfortable with holding a volatile digital asset directly in their treasury operations, at least yet. They are comfortable with holding a regular dollar-denominated asset like a stablecoin, and this is the Trojan horse. Stablecoins become the institutional entry point for tokenization and access to this new financial system. This allows institutions to step into blockchain infrastructure without immediately taking directional crypto exposure. And that's a huge psychological and regulatory bridge that they have to cross. And that's what makes RLUSD so important. RLUSD lowers institutional friction. It allows enterprises and institutions to begin operating on the XRPL infrastructure first, and then they discover everything else down the road that's required to participate in the ecosystem. The distinction matters enormously. Now let's talk about the actual growth trajectory of RLUSD, because this is the part that should probably get people's attention. RLUSD was launched in December of 2024. That's roughly a year and a half ago. It's already grown to $1.5 to $1.6 billion in market cap. That means it's one of the fastest growing, if not the fastest growing stablecoins in the market today. And what's important is how it got there. This wasn't driven primarily by retail speculation or usage in foreign countries like Tether or USDC. This wasn't a meme coin. It wasn't driven by yield farming. Most of the growth came from institutions integrating enterprise settlement infrastructure and regulated liquidity use cases. That distinction is huge. Ripple structured RLUSD differently from many other early stablecoins. It was issued through a regulated trust infrastructure, backed by cash equivalents and short-term treasuries, subject to monthly reserve attestations and audits, and designed specifically for enterprise and institutional usage. Now, let's look at some of the integrations that have already happened. We got LMAX Group, one of the world's largest institutional FX and digital asset venues, processing trillions annually. They integrated RLUSD into their infrastructure as collateral and settlement capital. Dubai and the DIFC have already approved RLUSD within their regulatory framework alongside other major institutional stablecoins. And Ripple has continued to integrate RLUSD into the broader tokenization and settlement incentives through their partnerships and their ties to other institutional finance infrastructure. And remember, RLUSD is still early. It's just a year and a half since it's been launched. We are potentially watching the biggest beginning of an institutional stablecoin adoption curve ever. Let's talk about what happens if this growth rate continues. If RLUSD effectively grew from 0 to 1.5 billion in roughly 16 to 18 months, and even if growth slows substantially over time, those numbers become significantly larger. So let's be conservative. If RLUSD compounds at 100% annually over the next 5 years, that would be around a $48 to $50 billion market cap. That alone would put it in the same category as the largest stablecoins in the world today. And here's where things become important. Market cap is not the real metric institutions care about. Transaction velocity is what they care about. A stablecoin with 50 billion in supply moving through institutional payment rails can facilitate trillions in annual transaction volume. And that's the key distinction, because institutions recycle liquidity constantly. The same dollar can settle dozens of trades per week. This is exactly why stablecoins are becoming so important to the new global financial infrastructure. They increase capital efficiency dramatically. So if RLUSD becomes deeply integrated into tokenized securities, cross-border settlement, treasury management, derivatives collateral, institutional DeFi, FX settlement, and payment corridors, then the transaction volume running through the XRPL could potentially be larger than the actual stablecoin itself. Now, let's combine that with the broader tokenization trend. If a fraction of the projected trillions in tokenization settle on the XRPL's infrastructure, the liquidity requirements become massive. And that's where XRP enters the equation. Because most stablecoins are tokenized assets, and more liquidity pools will emerge. The need for interoperability increases exponentially. And that's why I keep saying RLUSD is not the endpoint, it's the onboarding process for these institutions in this framework. This is large-scale proof that compliant stablecoins can operate inside of a broader interoperable liquidity ecosystem built on the XRPL. I think of RLUSD as a Trojan horse for institutional adoption of XRP in the XRPL, and not in a deceptive way, but in the sense that institutions come for stablecoins, and then gradually they will adopt the broader infrastructure. A bank may initially use RLUSD for cross-border settlement, treasury management, international liquidity movement, tokenized collateral, or trade settlement. But once they start using the XRPL, they'll begin to ask larger questions. Can we tokenize securities here? Can we issue debt? Can we tokenize funds? Can we settle trades instantly? What if we reduce the correspondent banking exposure? And can we collateralize this globally real time? That's where XRP becomes increasingly important, because the larger ecosystem grows, the more valuable the shared liquidity will become. Because when the larger ecosystem grows, the more valuable shared liquidity becomes. The most important concept in this entire video is that most people think stablecoins replace bridge assets. And again, I think the complete opposite. The more stablecoins exist, the more important a neutral bridge becomes, because stablecoins create another liquidity silo. And eventually, all these silos need to be connected. So let's say Japanese bank issues a yen stablecoin and their institutions issues a euro stablecoin. Ripple has RLUSD, tokenized tokenized treasuries are issued that are a yield-bearing asset on chain, and Brazil launches their stablecoin in Latin America. How do these systems exchange value efficiently? You could build a direct liquidity pool between each pair, but that becomes mathematically inefficient very quickly. A neutral bridge asset simplifies those networks dramatically, and that's where XRP fits. Not necessarily because institutions want to speculate on XRP, but because they need an efficient liquidity routing infrastructure that's a DEX that settles between all of them. And that's the key difference. So let's talk about how this actually compounds over time, because this is where the thesis becomes extremely powerful. RLUSD adoption brings institutions onto the XRPO, and once they're there, they're going to tokenize other assets and stablecoin and participate in liquidity pools, and there'll be cross-border flows that emerge, and more settlement activity will happen. And that volume across the network will increase demand for interoperability, and that interoperability increases demand for shared liquidity. And shared liquidity, guess what? Increases the utility for XRP. As XRP liquidity deepens, it decreases slippage, transaction capacity increases, larger institutions can participate, and settlement becomes even more efficient. That improved efficiency attracts more users, which create more stablecoins and tokenize more assets and demand more liquidity. And the cycle repeats. It's a positive feedback loop, a flywheel, if you will, for more liquidity and volume moving onto the XRPO and higher price for XRP. All of this drives XRP adoption and adoption for RLUSD. Adoption drives liquidity fragmentation. Fragmentation drives interoperability demand. Interoperability demand drives XRP's utility. Deeper XRP liquidity improves efficiencies on the XRPL, and improved efficiency, guess what? It attracts more users. The loop repeats over and over and over. So imagine this at a global scale, not one stablecoin, thousands, or tokenized deposits, or these other tokenized asset classes, everything. This is where people still think too small. They are looking at crypto like they're investing in these coins. This is institutional infrastructure. If tokenization truly scales into the tens of trillions or quadrillions of dollars because we get derivatives on chain, then liquidity coordination becomes one of the largest financial markets on the planet. And whoever provides the most efficient liquidity routing layer gains enormous strategic importance. That's why Ripple's market strategy makes a lot of sense. This is just one of the steps on the path to broader adoption. They're not just issuing a token or, launching another meme coin. They're building settlement infrastructure, liquidity infrastructure, stablecoin infrastructure, tokenization infrastructure, and interoperability for all of that. And RLUSD is the key part of onboarding institutions into that system. A lot of people still say, well, that's not going to happen because this isn't regulated. Well, regulation is the unlock for most institutions, and that is what they're waiting for. I think that the OCC is going to come out and issue stablecoin guidance, and we don't even need the Clarity Act, but the Clarity Act would help too. Either one of those are going to push the industry forward, but the technology already exists. But they are waiting on some type of clarity from the OCC or Congress. They need accounting clarity, they need compliance frameworks, they need operating standards, and they need custody standards. And Ripple has really built the stack for all of this. And that's why stablecoin legislation matters. But as soon as we have that, we're going to see an explosion in adoption of this asset class. Once larger institutions receive this clarity around stablecoins from the OCC or the Clarity Act, adoption accelerates quickly. Because the efficiency gains are simple and too large to ignore, no institution wants to settle in 3 to 5 days when their competitors are settling in seconds. No institution wants trapped capital when their competitors are operating real time with liquidity through XRP. Eventually, efficiency is going to win. It always does. But there are competitors out there. RLUSD, is going up against USDT and USDC, and there's many other stablecoins that have been issued. But Ripple's strategy appears different. USDT, largely dominant offshore liquidity and for crypto trading, whereas USDC is heavily focused on regulated crypto markets and fintech integrations. Ripple and RLUSD are focused on institutional interoperability and settlement infrastructure. That's very different positioning. Ripple has already spent years building banking relationships, opening up payment corridors, creating enterprise infrastructure, compliance frameworks, and institutional integrations to be able to launch this and get the adoption in an application that the others are missing. RLUSD plugs directly into that ecosystem. And if institutions increasingly adopt the XRPL infrastructure, well, the value of shared liquidity coordination rises dramatically, which will drive demand for XRP. So when people ask, is RLUSD bullish or bearish for XRP? I think they're really asking the wrong question. The better question is, what happens when the world has thousands of tokenized assets and stablecoins and they all need interoperability? I think RLUSD is the framework to help the other banks be able to launch their own stablecoins, because they don't want the counterparty risk of using Ripples, and they don't want to build their treasury. They want to be able to stack interest on the treasuries that they're using for their stablecoins. So that's the direction we're headed. And if XRP becomes the primary neutral bridge asset coordinating all of that liquidity, the scale opportunity becomes unfathomable for most people. Not because XRP replaces stablecoins, but because stablecoins themselves eventually require efficient interoperability. And that's the real thesis. That is the flywheel. That is RLUSD and XRP being part of the same ecosystem, driving more liquidity onto the XRPO. RLUSD is accelerating that exact use case for XRP that it was designed for in the first place. So in closing, the market still thinks this is about crypto speculation. I think it's about rebuilding financial infrastructure. And most people won't understand the scale of what's happening until the system is already operational. If you want deeper analysis on tokenization, stablecoins, XRP, institutional adoption, and how all of this affects digital assets and wealth creation, we would love to have you in our community at beyondbroke.com. Go check it out in the description below. And if you need help managing your digital assets and you want access to all of the credentialed partners that we have at Digital Ascension Group to be able to help you manage this and structure it for your family for multiple generations, we'd love to talk to you. You just go to digitalfamilyoffice.io. I appreciate you guys. Thanks for listening. Let me know what you think in the comments, and we'll see you on the next one.